Good morning, everyone. Today it's another start of a new week. It's the 19th of June, and as you know, every Monday we are here to do our weekly market analysis. My name is Pedro. I'm the senior market analyst at Alphachain, and usually in this session we are going to pay attention to the big news events that occurred last week. How did the market react to it, and start positioning our focus on this week's news, and what should we expect from the market, like which direction we are looking at. Usually we cover FX, starting with the dollar index, then we go through the major US indices, also some commodities, gold and oil included, and then we finish with the crypto, Bitcoin and Ethereum. So here we are, so beginning of a new week, and the week after the beginning of the central bankers' decision, right? Last week we had FOMC, so we had the Fed, we had ECB, and we had BOJ announcing their interest rates. This week, now we are going to have, and it's going to be on next Thursday, we're going to have the Central National Bank of Switzerland, and the Swiss National Bank. We're going to have the Bank of England announcing their interest rate. Aside from that, there's going to be a continuation of more news. For example, you're going to have the Fed Chair Powell testifying and in Congress on Wednesday and also on Thursday. That's going to be another important moment to look at, to see if there's going to be new commentary that's going to affect the market by the Fed Chair Powell, right? So he's going to testify on the semi-annual monetary policy report before the Senate, right? This usually tends to be more of a political conversation, where we have each of the Democrats asking a specific type of questions, and then you have the Republicans also asking a different type of questions, right? So they are usually like 2 hours sessions. It's going to be interesting to see if something's going to come out. It's going to be on Wednesday and on Thursday. But paying attention to what happened last week, right? And what was the Fed decision in here. Actually, let's start from Tuesday. So Tuesday you had CPI data. That was the biggest catalyst of data that we had, and the CPI came out a little bit better than expected at 0.1% on a monthly basis and at 4% on a year-to-year. Right, and as you can see in here, it's moving quite nicely to the downside, the inflation and the CPI data. However, the core CPI, that's a little bit more sticky, and 0.4%, I believe it's kind of 5.3% maybe for the year. Not really sure now what's the data, but again, it's a little bit more, it's higher and it's a little bit more sticky, and that's again one of the reasons that the Fed is going to take the approach that it took. Right. So then moving forward to the meeting, there you go. For the first time since March last year, we finally had a decision from the Fed to keep the rates as they are. Right. So it was unchanged. Now the question mark is this just a pause? Or in this case, like the word that they actually used during the press conference, which was skipped, right? Is this just the price skipping one hike and resuming during the next meeting, which is going to be in July, or is this actually the peak on the interest rate, and from now on we are going to just stay where we are at this 5.25% interest rate decision, right? And based on what Fed Chair Powell mentioned, this was at this point it's a pause, and we'll see. It's going to continue to be data dependent. However, what actually made the market move, and the big surprise, it was based on the dot plot forecast, right? So usually the Fed every 3 months, it presents the forecast for what to expect till the end of the year, and even the remaining next two years. And the biggest surprise, it's exactly that. On the interest rate decision, the dot plot forecast, it showed that the interest rate, it will be at 5.6% by the end of this year. right? So this is just a forecast. It's not exactly a plan that the Fed will follow 100%, but it's a concern, and it's what the Fed members are looking at, and based on the decisions that on the forecast that they made, right? And this immediately crashed the dollar, moved to the upside. The indices moved to the downside exactly in that moment. Because 5.6%, it will mean that the Fed will at least hike 2 more times until the end of the year, right? And so we will see if that is going to be the case or not. Again, Fetcher Powell during the press conference mentioned that this forecast dot plot is not exactly the plan, or it's not mandatory that Fed is going to follow it. It's going to still be data dependent. Within the dot plot forecast, there were more provisions in there. So, for example, looking at the interest rate at this point, yes, to be at 5.6%, which was initially in March at 5.1% by the end of 2023. In 2024, to be at 4.6%. Instead of 4.3, which was the prediction back in March, and in 2025 to be at 3.4%, right? To be the interest rate to be at 3.4% by the end of 2025, right? So all this prediction has been raised based on the comparison with the predictions made in March. Then, if you take a look at actually the real GDP, for example, by the end of this year, it was forecasted to increase as well, to be at 1% instead of 0.4%. Core PCE to be at 3.9 instead of 3.6. So again, inflation to be slightly higher than expected. And the unemployment rate, which is another big factor that the Fed looks at, actually to be lower than it was initially forecasted, to be at 4.1% instead of 4.5%. Now, the unemployment at this point is at 3.7%. So we are still looking to an increase in the unemployment by the end until the end of the year. And we have been talking about it, and that's one of the things that the Fed actually is expecting. However, at the lower rate that it was initially predicted. So we are seeing better outcome in terms of the economy based on the forecast that the Fed did, and that's why maybe the rates are going to stay maybe at this rate for longer. Now, a second question that everyone wanted to find out is, when are we then expecting any cut rates from the Fed? Initially, and back in March and so on, everyone was still looking for rate cuts still within this year, right? Maybe in the last quarter of the year to start the Fed to start cutting the interest rate decision to the interest rate. However, the commentary from the Fetcher Powell is that based on how sticky the inflation looks like it is, and all these strong market conditions that we have at this point are still quite tight. Most likely there's not going to be any rate cut until the end of the year. So that answer was that question was answered. So looking at what we can expect at this point, it's exactly that. So we are looking at in July for another hike of 25 basis points. So this is a prediction at this point, the 75% possibility of another hike in the next meeting at the end of July. But then and thereafter, it's going to be kind of to remain the same. So they are looking at this point, the prediction is just one more hike, and they are still even looking for a potential rate cut in December. So this is just a prediction of what the market is looking at. It's not exactly, again, maybe what's going to happen, especially with this rate cut at the end of the year. So yes, again, the Fed with the dot plot quite hawkish. However, the Fetcher Powell tried to be a little bit more dovish with his own commentary, mentioning that it's going to still be data dependent. Whatever it was forecasted during the dot plot is just again just a forecast. It's not exactly the plan. So we'll see what's going to be done by the Fed in the next meeting, which is going to be quite interesting to see. So this was the Fed, and then we had actually just one last point. Maybe we can complete with the US data. We had also the retail sales, which was a little bit better than expected at this month, and also the unemployment claims. And this is something that we need to pay attention to, right? Because the unemployment claims, again, since the beginning of April, that we were kind of within this range of 220 to 240. All of a sudden, we had a spike on the 11th of May, but these last two unemployment claims data, they were already above the 260, right? So maybe the new range now is going to be this 260, and let's see if it's not going to be higher. And this is eventually something that we are expecting, and the Fed is expecting, since we are looking for the unemployment to increase overall, right? So eventually these numbers are going to be reflected in the non-farm payroll and the unemployment rate in the US. Second question will be to see how fast this increase is going to happen, or if it's going to be kind of a steady growth, right? Just in terms of if the market is going to overreact to the data that's coming out in here or not. And then we also had the consumer confidence in the US, which was quite high at 63.9%. So this was based in the US and the data that we had in the US. Jumping into the Eurozone, that we had also the ECB on last Thursday, right? And this was everything expected, right? So we had another hike from 3.75 to 4%. And the expectation is, and actually Christine Lagarde mentioned, there's going to be another hike in July, which is most likely another 25 basis points, bringing the interest rate to 4.25. And then we'll see the next meeting, I think in September, we will see then what may happen. But yes, Christine Lagarde continued with the same statement, saying that inflation at this point is projected to remain too high for too long, right? So everything in the same. A concern that Christine Lagarde had, it was regarding to the wages. They keep increasing, and that kind of keeps the inflation at this level, right? So again, a little bit similar to the Thatcher Powell. They would like to see the unemployment actually start to be a little bit kind of a reduction in an increase in unemployment rate in order to kind of decrease this demand and in order to push the inflation a little bit down, including with the wages. Actually, Christine Lagarde actually presumes or forecasts that the unemployment in the Eurozone is going to actually decline first before it starts to increase in the future. So this was what we had. We had a move to the upside on the euro around this interest rate decision last Saturday. It was actually a quite strong bullish day on the euro. So this was in regards to the Eurozone. Jumping into the BOJ and the Bank of Japan, again, nothing was done, right? So everything remained the same interest rate at minus 0.10%, same control under the yield of 10-year government yield in Japan at 0.5%. So everything stayed the same. At the same time, we are seeing the yen crashing. In the other side, it would be to see the euro yen, dollar yen, euro yen, pound yen, dollar yen, and so on to rise, right? So we are starting to get closer, in particular dollar yen is starting to get closer to that 145, even though there's a little bit of a gap still until that level. But those were the levels that last year it raised the bell a little bit in the Bank of Japan in terms of the intervention that they did last year. So we'll see what kind of policy they're going to remain. I think this week it's going to have some inflation data reports, which is something that they will keep an eye on in order to eventually make a decision. But everything stayed the same, and meanwhile we continue to see the yen or the yen pairs moving to the upside. So that was basically in terms of the interest rate decisions and the central bankers from last week. Looking at the UK, so in the UK you had the unemployment last Tuesday. Employment count change, it was quite positive, right? And not just this month, there was actually a big difference in between what was the numbers last month comparing with this. There was a big change in the revision, like in a positive way in here. Like you could see, for example, that the employment count change, it was at 46,000, basically 47,000 last month, but it was revised to 23, basically half of it. And this month it was actually negative, which is positive. Less people asking for support of 13,600. So this is quite good. Again, this is the concern, especially in the Eurozone, but maybe in the UK as well, in terms of the average earnings, in terms of salary at this point at 6.5%. And this may most likely keep the interest rate, keep the inflation high. Unemployment at this point at 3.8%. Right. So this was in the UK. The UK that's going to have the interest rate decision next Thursday. Right. Looking now ahead of this week's data, we're going to have initially on Wednesday the CPI, which is going to be interesting to see if it's going to continue to decline. At this point, it's still quite high, even comparing with the Eurozone, with in Canada, in the US, right? It's still at 8.7%, but they are looking to continue to decrease at this point, expecting to be at 8.4%. So this is one of the last big data points that that's going to come out before the BOE interest rate decision, which is expected another hike from 4.5% to 4.75%, and it's even considering continuation to hike afterwards in the future in the next meetings. But we'll see what's going to happen in the UK, right? So CPI data still this week, and then interest rate decision on Thursday. And then we have the Switzerland National Bank as well, expecting another hike from 1.5 to 1.75% this week. So that's the focus on the interest rate decisions for this week. And then on Friday, just to complete the week, we are going to have full data of PMI, services and manufacturing, starting in Eurozone, UK, and then in the US. These days, they tend to be quite trendy, quite volatile as well throughout the day, based on all this data that is coming out. So this is what we have. Slow start of the week. It's going to be bank holiday in the US as well, so expect low volatility in the afternoon in today's session, and then we start to have some big data on Wednesday. So looking at the market and how has the market reacted to all of this. Right, last week, this was the dollar, so dollar index that we look at. So yes, we're looking for the dollar to continue to move to the downside. We're starting to kind of have this bearish momentum. We're breaking lows in here, and eventually that happened, right? So we had this big move to the downside in here. So initially you had initial reaction from the Fed. It was to the upside, but then eventually on Thursday, price moved to the downside on the dollar, and all the rest actually moved to the upside, right? And now we are here, right? We basically retested now a little bit of this structure that it was created in here in the beginning of May. This is actually kind of a good zone where price reacted from. Now, is this going to be the low on the dollar? That's a good question mark. Or is the dollar going to resume to move to the downside and getting a little bit closer to this level? So of course, next key level to look for is maybe somewhere in here. We're testing this previous level of support resistance or a little bit in there. So let's see what's going to happen in here on the dollar for this week, right? But a lot of the move that was kind of initially expected from this turn that has starting to happen. So let's see. Price may go a little bit lower, closer to this level before we continue to the upside. Let's see what's going to happen during this week on the dollar. Yeah, first target from these longs maybe somewhere in there, and then if we go a little bit higher, we also have this trend line in there that you can maybe take a little bit a look into it. But yes, we may create new lows this week. Let's see what's going to happen in here. And then we go into the US indices and what a move to the upside that we have or that you are having for the last couple of months. Right, starting with the S&P, right, we finally managed to break this high from August, something that Dow Jones and Nasdaq had already made, right? All these moves to the upside also still supported by this enthusiasm with the AI and how everyone has been quite bullish, and the indices as a reflection, it exactly shows that. So we broke this level. Initially we had a little bit of a reaction from a zone that we had, but then eventually during the FOMC, eventually price moved down, but then kind of end up breaking to the upside. So we are approaching now this new level. It's going to be interesting to see if price has a little bit of a correction from this level, and we can literally maybe start trading within this range in here. right? You may retest this level, or you kind of just retest this previous level support resistance, and we may resume the move to the upside, right? So cautious with that. I could see a little bit of a reaction here. Then we may continue to move higher. Now these levels in here, these are previous level support resistance as well, all the way from 2020, 2021. So this can be also an interesting zone to eventually to look for. We'll see any shorts or any kind of attempts to reversals. Be cautious. Don't really force too much into it. Wait for price actually to start showing some kind of weakness and kind of that actually wants to turn. Don't try to sell every single double top, because you may get faked out. But yes, in here can be some kind of reaction, but my first target somewhere in there, and then you do have this level in here. Again, in alignment to the previous high from August, can be quite interesting as well. Maybe as a continuation on the S&P. So yes, let's see what's going to happen. As you can see, looking at this on a weekly basis, we have 1, 2, 3, 4, 5. Basically, we had already 5 bullish weeks on the S&P. Let's see. We start to get a little bit too overextended, so we may have a little bit of a correction in here. Now the tendency as well within the indices, I don't know if you guys have realized this kind of a pattern in these last couple of weeks, but usually it tends to be a little bit Monday, a little bit to the upside, and then Tuesday and Wednesday price tends to move a little bit down, and then Thursday and Friday kind of continues to make another highs. So that's a little bit of the pattern that we have seen within the indices recently. And this is Nasdaq, right? Nasdaq went all the way. So initially we are actually looking for after the break of these highs and kind of price kind of resumes again and breaks the high again, we are looking for eventually price to target this level, and price is at that level at this point. So target has been achieved after we managed to break these highs, like, and in more particular after we do break that high in here, because when you break this high, there's maybe some probability that price could have a deep retracement before maybe resuming to the upside, but the only thing that price did was kind of retrace to downside, respect this level, and after we finally break the high again, this is kind of a confirmation. Okay, we are actually in this bullish momentum, and the next target, it will be kind of the next level of support resistance, which was exactly those highs. So we took them on Friday. Maybe there's a little bit of a more space into that level, but you start to get really closer to these all-time highs in there that were created in the beginning of last year, before all this move to the downside. All right, so interesting to see what kind of an opportunities we have. So we have this trend line in here as well. Within this week, maybe there's going to be some opportunity to maybe trade within this range, or maybe price can go a little bit higher. These were the lows created around the FOMC, right? We kind of spiked in there, and then kind of a continuation to the upside, respected quite nicely this trend line. So if you start breaking a little bit below, we may get a reaction from there, and we may move a little bit to the downside. Attention to this level, attention to this low, and then you may get closer a little bit in here. Like maybe this week we may feel this level in here, and then maybe resume to the upside, or we're just going to respect something in here and going to resume the move to the upside in here. Like, let's see what kind of big catalyst is going to be is going to happen in order to actually have a move to the downside in the indices, right? So interesting to see what may happen in there. And then you have Dow continues to move to the upside as well. If we count this high, and you're getting closer and closer a little bit more to these levels in here. So we still have this left shoulder in there, so that zone is still quite interesting. Now we can actually maybe even use this one in here. And to look for, actually it's already touched in there, so that opportunity actually it's gone. I just already reacted from it after taking these lows. Could actually had already been a good sell opportunity in terms of reversal. And let's see if you go a little bit closer to this level in here, and if you start trading within this range, eventually if you break below this level, then maybe we can extend a little bit more to this range in here. Right, so that's something just to keep an eye on the Dow. Even though we broke this highs, this is actually the last high that has been created. So we are actually within this range still. So maybe there's still opportunities to sell somewhere in here. But yeah, let's see what's going to happen in here and on the indices. Looking at the DAX, we just broke new all-time highs. as well, right? So we're testing here. So we had broken already those highs, reacted from that level, and now we just fake out again the highs, and we are trading somewhere in here. So cautious with any sales. Like anytime you are trading from all-time highs, maybe there's a possibility of another fake out before maybe any move downside. Eventually, you may trade within this range. In here, maybe in here can be a good continuation to the upside. So let's see what's going to happen on the DAX. Looking at the individual currency pairs, and this is what we have. Right, so we have this euro index. Now, I mentioned last week that the euro index usually it has a tendency to move to downside when you have ECB interest rate, as it happened last May. However, in this case, we actually literally went all the way down, or kind of were in this bearish momentum since the meeting out until here, right? So we had a little bit of a correction at the beginning of the week, and during the ECB press conference, we were here. So we just fake out these important highs. That was an important zone to look for, and the question mark it will be: would you kind of make this and maybe resume downside, or just continue like this, resume to the upside, or move downside? But this level in here, and 21 that actually paid attention during the ECB press conference in order to avoid any sales in here. This was a zone that it was important, and at least for us in terms of looking, if price had broken below this low, we may have turned a little bit more bearish. As long as price kind of keeps holding this level, then we actually become bullish during the press conference in here. This is exactly what we look for during that press conference, and as soon as we break above this highs, right, we enter into this compression zone, and the target has been filled after that. Now we are at this highs, and there's maybe even possibility to look for price to reach a little bit closer to this level. We may start compressing a little bit, and then we'll see what's going to happen after price getting a little bit closer to that level again. All right, so it's going to be interesting to see. On one picture, we actually engulfed to downside in here, so we actually may have eventually a move to fill all of it more to the downside. It's going to be something to keep an eye on the euro pairs. But for now, we may just continue to move higher. Yes. Wait. All right. So that's the euro, and then the BOG, like the yen index, which actually broke that low. We opened with a little bit of a gap, but there you go. Like the complete continuation to the downside. There was never an indication that we wanted to go higher in here. Price never really broke any highs, and therefore we just continue to kind of avoid any longs in here. And in this case, it will be the opposite: shorts on the euro yen, Aussie yen, and so on. Right. One of the main differences that actually you can see in here is the gap between this yen index and the dollar yen. Right, because this was the intervention, and this was intervention last year. However, dollar yen is still quite far away from the specific levels. This would mean dollar yen at around 145 last year, and in here to be kind of 151 or something like that. And the dollar yen, as we've seen a bit, is still quite far away from that level. So maybe conversations of intervention or the Bank of Japan to change something in their monetary policy, we may still need to wait until the dollar yen actually gets closer to that 140, 145. So we'll see. We may create new lows. We may just continue. This level in here can be quite interesting to see if it holds price, or if you break above it, maybe can have a little bit of a correction to happen in here. But as long as they continue with the same policy, we may just continue to see the yen getting devalued and decrease and moving to the downside. Looking at the individual currency pairs, right? And this is what we have at this point. We have the euro, as we mentioned, it moved to the upside during the interest rate decision during DCB, and we are getting closer again to these levels in here, right? So this is actually quite a good level where we are reacting from, but similar to the dollar, is going to see if we are going to move a little bit higher and then move to the downside, or if I'm going to actually eventually even continue to move to the upside and eventually create new highs in here on the euro. Looking at the bigger picture, maybe that's going to happen. Maybe the euro wants to go even a little bit closer to that level. So we may have that all this bullishness being created, right? We don't have any new lows being created, and we actually have higher highs being created on a regular basis in here. So we'll see bigger picture if this is not something that eventually is going to happen. More in the intraday or more within this week. It's going to be interesting to see eventually price can go there. There's maybe even sell opportunities above this level, kind of above the size within this level. So let's see. It was a good zone to expect some kind of reaction after the big momentum that we had last Thursday. Pound, looking at the pound, quite bullish, right? We kind of expecting that after breaking this high, and actually after the confirmation of breaking that high. The next big level of structure, it will be maybe somewhere in here. So we may even continue to look at the pound continue to go higher. Again, CPI and interest rate decision this week on the for the Bank of England. This is just a level that I have in there, a level that in theory should have been respected on the way down, and it was not. So maybe respect a little bit price in here. It's actually getting that close in there. So we may go and retest maybe all this level in here, and then continue to move to the upside. But quite a strong move on the pound as well. Let's see. We are going to be by Thursday when you have that interest rate decision from the BOE, and then we have Aussie. Again, another one that just continued to move to the upside, kind of breaking a little bit his size. But we'll see. We had an unemployment rate last week in Australia. It was quite positive. Again, retesting this previous level of structure. Maybe there's a little bit more room to the upside. Maybe price can get closer a little bit to this level, or even take this high, getting closer to that level. But we may have a little bit of a correction first. So let's see what kind of a move we're going to have. I'm expecting eventually new highs in here on the Aussie, but let's see if we have a little bit more of a move to the downside before maybe continue to go higher. And then of course the yen, right? And what I was mentioning before is, for example, this was an intervention, and these ones were the next ones, and the first one is at 145, and you can see how big of a gap still it is. At this time, the yen is at 142, dollar yen is at 142, getting really close to 142, while so there's still a little bit of a gap in here that price needs to close before even getting to that level. So we'll see what's going to happen for the other yen pairs until actually this dollar yen gets there. At this point, we are reacting from a little bit of this level of structure, right? We finally moved away from this range that we had with the FOMC also helping for that to happen, and the dollar moving a little bit more to the downside as well. Yeah, so let's see now what's going to happen in here. Are we going to continue this move? Are we going to kind of eventually get closer to that level? That's going to be something to keep an eye on. So maybe getting or continue to be bullish a little bit on the dollar yen can be a possibility in here, right? And then eventually, if we're getting closer to that level, we'll see what's going to happen. Price most likely it may move just almost in a straight line, kind of with some momentum, or eventually it's going to, again, it may move slowly or faster. We'll see. We're going to pay attention to what's going to happen as price progresses towards that level. But yeah, nice retest previous level support resistance, may go down a little bit and maybe continue to the upside. And looking at the rest of the yen pairs, like a little bit more bullish on the other ones. You can see this big momentum on the euro yen. We managed to break that level. Euro yen is reacting from levels back in 2008, somewhere in there, where maybe they can go even a little bit higher. So we'll see what's going to happen. Today, a little bit of a correction here, but we continue to go higher. Again, cautious with sales. Maybe the best approach would still be looking for longs. But yeah, and also pay attention to what the euro is doing. Maybe it can help a little bit. And here, pound yen also quite bullish. Also in the going with the momentum on the pound, and we are finally getting closer to this range. So maybe a little bit of a zone for a correction after we broke this size. Basically, next structure it will be there, and this is where we are. So let's see what kind of opportunities we are going to have in here. It's again the yen pairs quite overextended at this point. However, the yen pairs sometimes have that tendency, and fighting a trend on the end sometimes can be, it may not be the wisest thing to do. So cautious with anything, and maybe want to actually continue to look for longs after some kind of retracement. Maybe you can have some kind of opportunities in there. Aussie yen, kind of the same. However, it's actually reacting from a little bit of the structure. So can be maybe one of the best ones to ponder to look to some kind of shorts, because we do have a little bit of this level to help you, that can work kind of a little bit of a resistance. Aside from above that, we may need to go a little bit more to the upside, and that's maybe where actually the ASEAN may want to go to. However, we are compressing a little bit. Maybe there's some opportunity to look for some kind of sell. Maybe price can retest a little bit, something of this level before eventually breaking the highs. Just something to keep an eye on in here. If you do find something interesting in here to look for a sell, maybe can, or just wait for maybe double top, wait for price to break, and then maybe fake out in here and something like that to happen, and maybe price can go towards that level. So yeah, that could be one possibility. And then you have CAD, right? And CAD finally broke all these lows since October last year, right? So it's retesting now levels from September last year. We had this strong level of support resistance just underneath these lows. So let's see what's going to be now the next move on the CAD. Is it just going to maybe retest this previous level of support resistance and resume the move to the downside, maybe getting a little bit closer to this level? That could be one possibility. So yes, maybe there's going to be a continuation to the downside, or what kind of a move we are going to have. We are reacting a little bit from this level of structure, which was still fresh below these lows, so that was a little bit expected. But eventually, I think we may continue to move farther down on the CAD. So we'll see what may happen in here. If by any chance you start breaking above these highs, then maybe the conversation changes, and we can extend this trend line as well to help you to see that. If you do break above this high, there's maybe a long opportunity in here, at least until this level, and then you'll see, or until that level. Dollar franc Swiss, right? So dollar franc Swiss has been quite bearish. Actually bullish in a longer time frame, and bearish kind of in the most recent weeks, since we broke kind of these lows. We had some good opportunities to look for a sell in there. The target that I'm looking for is still a little bit below it, so I'm still looking for eventually dollar franc Swiss to get closer to this level. We are reacting now from this previous support resistance, and we are going to have interest rate decision in Switzerland as well. So that's going to be Thursday. So let's see where it's going to be by Thursday, and if it's going to be kind of a catalyst to push price to the upside. Bigger picture, we actually broke a high, so I wouldn't mind to see eventually price doing something like this. Now, this may take weeks or months eventually to complete. So I'm curious to see again what kind of opportunities we are going to have. And this is going to be one of the pairs that I'm going to be paying attention to, because eventually I want to price to get to this level, and when it gets there, I want to see how price is going to react from there. We may have a good long opportunity from here. Again, we need the help of dollar to do that. We need to see dollar maybe moving to the upside whenever price gets there. So those are basically for the currency pairs. We are looking at the commodities now, and in this case, gold that is moving to the downside as well. That was also another move that was created during the FOMC, and then eventually we move to the upside in here on Thursday. Now we are reacting from this level. We managed finally to break these lows. We are kind of within this range for quite a while, so we managed finally to break these lows, and then we had the correction to the upside. The zone that I'm looking for on gold, personally, it's going to be somewhere in here above these highs. I'm looking forward to eventually gold. I would like to see gold going there before maybe resuming the move to the downside, and we may resume the move to the downside. We are creating kind of this momentum. So we are breaking lows, not breaking highs. So eventually this still is a kind of a bearish trend in here, and we literally left this zone left behind with none of these highs reacting from there. So eventually to be a zone that I'll be at least keeping an eye on. Now price may just react from here until here and then continue, or price actually can maybe go here and resume the move down. It depends on the approach as well, but that's something just to keep an eye on. Gold, oil, like oil has been quite ranging, like with all this news of cut reduction. China's trying maybe to create or input some stimulus into the economy, which creates a little bit of a momentum to the upside on oil. Again, we are trading within this range of $74 all the way to maybe 66 in here. So as long as we kind of, most likely are going to spend some more time, a little bit more time within this range. So let's see what kind of opportunities we are going to have in here on oil, on what's going to be the catalyst that's going to make oil move away from this level. They're trying to keep push price. Yeah, maybe they found a little bit of stability as long as price is kind of trading, or it's at around $70 a barrel. And then it jumped into crypto, right? And it was another quite volatile weekend in the crypto space, right? We had a big momentum to the downside around the FOMC on the 14th of June, a Wednesday. And there you go, right? When we created this double low, that kind of becomes too attractive. So usually price tends to go and fake out that level. Just like in here, anytime you see double lows being created, you need to be a little bit concerned. Similar scenario, because most likely before even price makes any big move to the upside, price will eventually take out that double low and then eventually move to the upside, right? And actually the trade with the double low is actually after the fake out, wait for it, and then for price to move upwards. Now, yes, we did break below these lows, but we are still within this range, right? It's still a little bit in alignment to this previous support resistance, and you are in here. And as long as price keeps holding somehow this level, it's true that we went below the 25,000. There have been some kind of news coming out as well in regards to the crypto. But as long as kind of price still keeps holding this level, there's maybe the chance that price could go higher. If by any chance we start breaking below that, then maybe the next zone can be a little bit lower. We may start aiming towards 21,400 or something like that. Now, something to keep an eye on is exactly this, right? So we had the big momentum during the first quarter of the year, all the way until mid of April. And this second quarter of the year has been quite bearish, right? However, the length of the move or the strength of the move doesn't compare with the bullish move that we had, right? It's basically maybe 50% retracement comparing with the move that we had during the first quarter. So that's not as bearish as it seems like. This could be just a correction, maybe before price resuming the move to the upside. Like maybe that could be one of the scenarios. So yes, let's see if this, because this bearish move, as you can see, anytime price goes down, there's always buyers fighting the price. So we kind of need a proper momentum without price having a deep retracement. Because at this point, anytime price breaks down, it has a deep retracement towards the next level, and you keep moving like this. Eventually, all of this starts to become compressing, and all of a sudden you can have maybe a strong move or quite a strong move happening in here. This could actually be a good trading opportunity. If you do break below this low, price could resume all the way, go above this size, react from here, and then resume to the downside. Yeah, this is just kind of a technical part of it. However, crypto is quite emotional. So if you actually go above this size, you may even create new highs in here. Just in the lower time frame, as one that I'm looking for, maybe it can be something around this level, above this size. Maybe price could eventually go there, and from here we'll see what's going to happen. There's maybe a new opportunity to look for along as well, around these lows, if price kind of retraces in there. This is just kind of a more a shorter time frame zone that I'm looking for. And then Ethereum just keeps respecting this low as well, kind of breaking a little bit. Let's see, right? It continues. We are breaking new lows, so maybe this can look like a little bit of a bearish momentum, of a bearish trend. However, again, similar to Bitcoin, anytime you kind of have a little bit of a deep retracement, kind of move, kind of have a deep retracement after that. So let's see what's going to happen. This wave actually is still fresh in there. So let's see what's going to happen in here on Ethereum. In here, maybe this below this level, we might just continue to move down. Yeah, it's going to be interesting to see what may happen. This level can be interesting. There's something in there, and at these levels, there's maybe still opportunities to look for another move to the upside, right? So keeping an eye as well in here. You can see how quickly the moves can happen, and then all of a sudden there's a range. So yeah, it's a different dynamic at this point, trading crypto. And that's it for me, guys. Again, thank you very much for taking the time and watching the weekly market analysis that we do. Feel free to ask any questions. and to like and subscribe as well into the channel. With that being said, I wish everyone a great week of trading, and I'll see you next week. Thank you very much, guys. Bye bye.